Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we're going to be talking a little bit about protected liquidity. Protected liquidity is something that you want to understand very well. You want to know why it happens, when it happens, and what can we sort of read within that protected liquidity that can assist us in directional bias for the day. So as you can see guys, this is Euro USD on the 30-minute time frame, and this is current price action, right here. This just happened previous week, I believe. So if we look over here, you can clearly see that we do have Asia highs and lows, and most of the times both get taken out within a particular trading day. So however, we do have instances where the Asia high or low is going to be protected, as we can see over here, guys. And this is recent price action. This is a Asia high that never got taken out, and this is another Asia high that never got taken out. And there are some rules and ideas that we can use to identify if an Asia high or low is likely to get taken out or not. And if that sounds like something you want to learn today, make sure you stick through the entire video because we're going to be discussing some ideas around that topic. So let's get started. So traders, here we are once again, and we're going to get started talking about protected liquidity. So protected liquidity basically means specific liquidity pools that are going to be protected for the day. Now, why those liquidity pools are going to be protected, once again, we have different variables, right? You should understand that the algorithm is very complex, that it has multiple ways of operating, so there is not a single set in stone thing that will always happen and occur, right? There's things that repeat, but they always show up with different variations and variables, right? So as we said, protected liquidity is what we're going to be talking about, right? More specifically, we're going to be focusing on Asia highs and Asia lows, because those are liquidity pools that the algorithm likes to target and sometimes protect. Now, why do I say sometimes protect? Well, you will find that Asia highs and lows will sometimes be protected due to bank interest. And this is where bank interest actually comes into play, right? So let me take a second and write it over here, bank interest. If we have a market that looks like this, right? Let's say we have a market like this, and you are currently, well, let me remove this leg up, let me make some tiny. So we look at this, right? And we're moving into the Asian session. Now you understand that, hey, we're moving into the Asian session. And once again, if you're confused with that easy and really simple information, you can review my Forex daily cycle video because I go very in depth over there, right? So this is something you want to keep in mind, right? Bank interest, Asia highs, and Asia lows. So we're moving into Asia. What do we see? Well, Asia may range, Asia may do whatever. What you want to pay attention is where is the Asia high going to get where's the algorithm going to print the Asia high and low? If you find that if you are in a bearish market over here, and we can clearly see that, right? We do have some sort of break in market structure over here, so we can potentially expect that, hey, this is a retracement leg that should lead into lower prices over here. So let me actually take a second and let me redraw it with a different color, because that's going to be helpful for you, right? So let's get rid of this. Let's say we choose green. This is our Asian range over here, right? Let's say like that. Asia comes into play. Let me grab red back over here. Asia comes into play. We print the low, most probably anywhere between 2:30 till 3:30, 4 a.m. And then we print a high over here. And this is sort of our Asian range, right? We come to the charts in London, pre-London, sort of Frankfurt, and this is what we see. Well, we can assume that the Asia high is most likely going to be protected this particular daily cycle. Reason being is because it is sitting at a external structure. It is sitting at the edge. If we draw the box over here, and let me actually grab my rectangle, we can see that the Asia high is actually printed right here. Hence, we can assume that the bank interest in this market is to protect this high over here. And this is pretty important, guys. And once again, this is not everything you need to know in regards to Asia highs and lows, but this is an idea that you can potentially use. So we understand that above and below every single swing point in the market, we do have what is known as liquidity, right? You should understand that at this point, every swing point in the market, we understand that that is sell and buy stop sitting and resting above and below that. So if we finish the Asian session, right, and Asia was not able to clear this high over here, which represents liquidity, remember that, then you can assume that if you have a proper shift, whatever confirmation you may want to use, right? I'm not going to get into details, but you can assume that if you have proper confirmation within a bearish market, and you see that the Asia high has been printed right here at the edge of structure, not being able to take this swing point liquidity out, then you can assume that that Asia high is most likely going to be protected for that variation of the daily cycle that you're currently in. And this is pretty powerful information, if I'm being honest, guys. You can use that information and create a system for yourself, right? You can say to yourself, I'm going to be waiting for those days where Asia highs and lows are protected. And that is all you trade. But once again, don't say that, hey, this is an Asia high over here right at the edge, I'm instantly selling. No, that's not how it works. You still need to assess structure. You still need to sort of understand where liquidity is sitting, right? Even though this is a liquidity pool, we could have two stacked Asia lows or three or four sitting below this area, and you can expect that that is going to get targeted, and that way you can have more confidence and confluence into taking the sell position over here, right? You still have to assess the bigger picture. You may have some sort of trendline liquidity over here, and now you have more confluence, or if we look at a scenario where a Asia high is sitting at the edge but gets taken out, right? And let me actually remove some stuff because it's getting pretty messy. Let's grab red back over here, and let's say that this time we actually do something like this, right? We can potentially come back up to the Asia high, engineer some sort of relative equal high liquidity, maybe even building a higher time frame trend line. Remember that the market is absolutely fractal, so there is a probability that this is going to be used as an inducement zone, which is something that I'm not going to get into, but there is a probability that that Asia high liquidity can be used as an inducement zone. So it can potentially engineer liquidity over here, make people want to start selling the market, right? When it creates those multiple touches over here, maybe even 3 touches, creating some nice resistance, right? And even you can get a short break over here, and then it resumes bullish because this area was being used as an inducement zone, and you can clearly identify that liquidity was being cleared to the upside since we had those, as I said before, those Asia highs being stacked, Asia lows, sorry, this is important, actually Asia lows being stacked and protected on the way up, because now the market is interested in clearing liquidity to the upside and is saving that Asia low liquidity for whenever they decide to take price lower to have enough fuel to actually fulfill the movement. So I really do hope this provided you some insight and information in regards to Asia highs and lows and protected liquidity. I really did try my best to explain this, and now we're going to be jumping right back into the charts, and we're going to be taking out those Euro USD examples. And once again, I know this is hindsight, but I cannot teach it real time because I would need to record every single candle printing, and that's not something that I want to do. So we're going to be going back to Euro USD, and we're going to be sort of walking you through the Asia highs and how they actually were protected for the day and led into lower prices. So traders, we're back on the charts and we're looking at Euro USD on a 30-minute time frame. And once again, I know this is hindsight, but this is the way that I have to teach it because I cannot record every single candle printing, right? So this is Euro USD on a 30-minute time frame. And as you can see, first thing we can notice is we are in the Asian session currently, right? So let's actually play a bit of price action first. First thing you notice is we're approaching that 2:30 till 3:30, 4 a.m. window, right? So you know that a Asia high or low is most likely going to get printed over here, right? So we see that, and now we're sort of starting to leave Asia, right? So this is the first thing we see over here. We leave Asia, we move into Frankfurt. What do we notice? And this is where we start applying the concepts I just explained to you. So we can clearly see that we are sitting at a edge of structure over here, which is previously a last point of mitigation, right? If you watch my video on order flow, then you understand why this is a last point of true mitigation over here. We do have a Asia high right here at 4 a.m. at the edge of structure. So this is your first clue that, hey, Asia was not able to clear this high. And if we were not able to clear this high, this means that bank interest is sitting above this high, right? Right over here is where the bank interest is sitting. So as we understand that, and I think I've spoken about this in a previous video, but you have to think about sessions as time windows during the trading day that have specific tasks to fulfill. Each session is trying to either create liquidity for the upcoming session or liquidate the previous session. That's just a bit of advice I can give you now that it can also help you with your directional bias, right? As you can see, this is a big puzzle that you have to piece for yourself and sort of make it work. So we see over here, we leave Asia, we print that over here, so you can expect that that Asia high is going to be protected, right? Let's keep playing price action. At this point, we take the Asia low out, cool. Let's see what happens. And I don't ever think this was a particular trading day where you could have actually caught an entry unless you were taking those risk entries at those areas. That is something that I teach on the mentorship. So if you are interested in that, you can sort of take a look into the mentorship page, which is going to be available in the description below, right? So we continue. We see that this Asia high was actually protected for the day, right? We took the Asia low liquidity out, and if we did that and sort of continued aggressively lower, then you're probably not expecting a test over here to continue lower, and that is something that is going to occur, so be okay with that, right? And that's pretty much it for this Asia high day. As you can see, it prints over there. It fails to clear the liquidity high, so you assume that that is going to be protected. However, there are more information and clues over here that you can read in order to identify if that is really going to be protected. So we speed this up and let's go to the next trading day. Next thing we see, Asia range building, Asia high right here at around 4:30. Asia high fails to clear the previous Asia high, so and it is sitting on the edge of structure over here. We're just tracking order flow. Now you can assume that bank interest is sitting above this high over here. Also, if you look at the internal structure, it is pretty messy, so I wouldn't be actually referring to that, but you can sort of assess how we may actually be ranging and potentially preparing a bear shift into Asia low liquidity over here, Asia low liquidity taken out, so this is not a valid pool, but this one is. This is a Asia low liquidity with trendline liquidity as well. We do have another Asia low over here, so you have more clues around that idea, right? Let me get rid of this stuff because this is getting messy once again. So let's see over here. We follow price. Let's see what we have. This time we have the Asia high once again over here. Let's see if we can sort of, oops, okay, that's fine. So as you can see, price leaves Asia. Frankfurt comes into play right at London Open. We retest some midline POI, which is this one over here. We then come back up, provide better entries for the upcoming sells that then go ahead and take those liquidity pools out, right? We do have China liquidity. We do have Asia lows liquidity stacked around that area, right? So as you can see, if you look at on a lower time frame, this is probably a perfect breakdown then a perfect test, and continuation lower, because you know that this high is most likely protected. So that is going to be it for this video. I really do hope there was some value over here. Please leave a like, comment, and subscribe if you actually enjoyed the video, because that helps me out in determining whether you want to see more content of this sort or you want to see something else. Also, feel free to do comment video suggestions, and I will try to take a look into that, and to visit the mentorship page if you feel like you want to have some assistance in your trading and a group and community you can communicate with. So with all that being said, I wish you all good and profitable trading, and I will see you guys very soon.